Hello, in this web video I'm going to go over a practical application of the desktop. Today is November 16th, 2015, and we're going to take a look at the S&P 500 futures. First thing we want to focus on is what is the condition. Market state condition today is bull trend correction. That's our tag UPC. And a bull trend correction is the market has produced a negative signal against a positive trend. The market remains firm. We have this underlying positive tone, but it's vulnerable to a counter trend corrective break. The market's searching for support, and it's characterized by stop and go trade with sharp emotional breaks. This corrective action can disappear quickly, so avoid leveraging up on any sell-off, as the positive momentum will try to reestablish itself. This is the underlying foundation. What are the attributes? Attributes are looking for potentially a churn in momentum, a drop in volatility. There is a negative bias because we're in this corrective mode. We're in a corrective trade. But once that correction's over, we would anticipate that the bull trend would try to reestablish itself. So that's the foundation of the day, bull trend correction. The next thing we need to identify is what's the structure of this market state condition. Key structure points are the R level, the upside pivot, and the DP. R level is above the market, significantly above the market. So what this is telling us is that this bull trend is in a correction as long as it's below the R level. Today in the S&P that's 2059 and a quarter. So the market can come all the way up to this area and it's still in a corrective mode, still vulnerable to corrective action. Corrective action could be a break, corrective action could be choppy trading. It's still vulnerable to a corrective action, and that corrective action could break down to the downside pivot, which was 1998.75. So the downside pivot represents that lower trough. If this bull trend is going to reestablish itself, we would anticipate that the market would stabilize above this level and start to perform as a bull trend. We can take a look at the guts to see what's happening here, and here's the MC value plot. So we had a market that was in a positive trend. We had a real dramatic shift in the MC value. We had a 9-point shift in the MC value. That's a real big technical shift. Now, this is a metric that you can sort by on the market grid, and you can see that the S&P is really standing out here. The font's bigger, it's yellow, it's really an extreme MC value shift. A lot of times these markets get to extremes, and that's it's good to know that we had this major technical signal that happened. Really huge shift. It's a good tell that there might be some interesting trading activity when you have such big technical shifts. So that's a good sort to look for. Why do we have that shift? We can look at the guts and we can see that the DMI system is orange, and so it's a sell signal. So we have a sell signal in the DMI. We still have good trending ability, and we can see on basis the plot that we moved from the positive segment of the MC value, and we shifted all the way down towards the lower negative segment. So we could look at this lower neutral area as kind of like where the DP is. So if this market's going to stabilize, we should stabilize here, and we're either going to bounce back into neutral, or the trend's going to try to salvage itself and regroup for a rally back up to the R level. So we're looking at the foundation of the market. The market state condition is bull trend correction. We've got the R level above the market, so this is the over-under number. That's the bull trend really needs to get above that point to engage. We can take a look at this structure on a daily chart, and you can see this dramatic sell-off that we've had that turned us into this bull trend correction. You can also see that this work is identifying the downside pivot as the low point. We do have some structure low here, but the way the segments that the market's moving in is identified here. We can see that this market's going to be at hard press corrective trade below the UP, and we get back above here, looks like this corrective would be more digestive, and then absolutely getting back above this level, it's pretty clear that okay, the positive momentum can continue. It's always nice to see this structure on a longer term chart. Helps give you clarity, reinforce the condition. By viewing the levels on a daily chart, you have good trade vision. If we are at this point, what if it doesn't stabilize, where can it go? If it does stabilize, what can it do? You get a better sense of where you are, so you're not caught up in the moment and in the emotion of the market. So the next thing we'll take a look at is what are the anticipated strategy themes. So with the R level above the market, this is really where the big selling energy is. Either off the R level or around the upside pivot. So as the market's moving down here, it doesn't have as much energy in the sell side, so we want to be aware of that. If we do get a rally up to here, we want to fade that momentum. The other optimal thing to do is to accept a buy reversal. So a buy reversal, the market will come down and give us an exhaustive signal at the DP, ideally taking that level out. And then once it gets back above it, that's our trigger. But the key is the exhaustive theme. You have that emotional flush. That's the definition of what we're looking for on a reversal. And on a hedge theme, if this market's negative, it should maintain a trade below the directional. So as long as it's below this 2018.75, it should remain hard pressed because we're walking the staircase. And if we do get above there, that could be a signal to a corrective rally targeting the R level. The other hedge strategy is if sell UP reversal. So if the market does rally above the upside pivot and then can't get to the R level and starts to falter and fail back, and that would be another sell opportunity to get back on kind of in the next corrective move lower. So today is a Monday, so we've had some overnight eventful trading. So here's Sunday evening, and then the overnight session, we're coming in around 7 a.m. And what do we know that happened? We know that the market gapped lower overnight, and it stabilized off the downside pivot. So we had we did have, in essence, we had this exhaustive signal off the downside pivot. And then the market bounced, and after it made its exhaustive low, it started to build positive structure. So it started to perform like a bull trend. So we're kind of in this theme right now. And then we're getting a violation of the directional. So that's happened. But at this moment, we have yet to breach the CR+. So if we look at the critical range, we've tested the downside pivot, and now we are trading here at the CR+. And what do we know about that level? We've had that eventful move. It came down to the downside pivot, and now we're testing this level. This market isn't a correction. Are we going to have a digestive trade? Are we going to, and if we are, this CR plus can contain the market, and we could just fall back into a sideways digest after the big event overnight. I'm going to add some metrics. I'm going to add our variance. So this is the kind of the sweet spot around the inflection point, and I'm also going to add our alert distance here, so we can kind of really see that area of influence. We need to really pierce this 2028 level to take the CR plus level out. So we start to pre-trading before the regular session, coming into it on the financial open, and we have the CR plus is holding the market, and then all of a sudden off the opening we get a breach of the 2026 CR plus. And what do we know? Once we get a breach of this CR plus level, it gives us more of a positive tone. So we're anticipating now a play for the upside pivot. So any kind of pullback into the directional area, we're going to look at that as a buy opportunity just based on the price map. You know, when we factor in the strategy theme that's currently in play, and we note that we're already had an exhaustive signal moving us this way, and now we're getting a confirmed breach of the directional, and we're coming into the regular session open. So here the market's giving us a buy opportunity off the directional, back into the variance. So we're always going back to what are the facts. And fact is, we've got a market that gave us a good exhaustive signal here. At this point, we're not sure, are we just going to have this kind of rotational trade around the directional, and that was the event, and that was it, and it all happened overnight. But the fact that we came above here, the CR plus variance, it really confirms that we're moving into this theme, and we've got an opportunity for more a corrective rally, this hedge theme rally targeting the R level. We're going to key off this low for our positive structure, and we're going to work that. And so literally, as long as they can stay above this area here, we're anticipating that this market has the potential to rally. And part of the bull trend correction, we're looking for the bull trend to re-engage. So we're looking for the market to just perform as a bull trend. Continue to hold higher move highs, higher move lows. That's what a bull trend is. And this is what we can anticipate intraday as well. And the market gives us that move. So the important thing here is we're in this bull trend correction. At this point, the market is telling us that the correction is over. Up until this point, with the market, with the CR plus containing the market, it's that was like the high squeeze point that they could go above the directional if they're going to kind of fall back on that corrective trade. And so there wasn't a lot of clarity. So we're always looking, when are things clear? And at this point, when they get above the CR plus, there's clarity. The market wants to go higher. And they make it difficult, but they work into the directional, and they give you a great opportunity at the variance. Again, the variance is the optimal area to enter in. And as the market's, you're entering that level, your risk is. And you can stagger your risk. You can stagger your risk below the variance. You can stagger your risk below the alert distance. And you can also stagger risk underneath that structure low point. But as the market starts to move higher and we get back above here, you should anticipate a reaction from the upside pivot. But looking at this minor structure, and we should expect something like this. We should anticipate it. We should anticipate this kind of a linear move making a play for the R level. And riding that momentum. And there's no reason to think that we should do anything different. And we're not looking to fade the upside pivot just because it's the upside pivot. We would accept a reversal strategy, but the market needs to take it out. So here's our alert for a reversal, and we need it to reverse here. But until that happens, our trade vision is the market's going to the R level, and we're just looking at this price structure within market structure. That's so important. How is the price structure behaving within the structure of the market? And here's the bigger structure of this market state. By knowing the market state condition and its structure, when we watch price action within that structure, that's what gives us our clarity. And the market. This is the condition. When we're trading at these levels, are we going to get that exhaustive bounce? That's what we should anticipate. And when we get it, where can it go? If we bounce here, we can go up here. How is it going to get there? We're not sure. But as you see the market, it gives us the tells. It gives us the confirmations. and we're always anticipating, is it going to re-engage in that bull trend action? And we're there for it, and we have trade vision. Let's take a look at a different chart with a different view on volatility. How did the VIX perform during this event? So here's the 8:30 regular session open, and obviously we had some good volatility with the events overnight. But you can see as the market confirmed moving above the CR plus, coming back to stabilize at the directional, and we started to move away. At this point we have some good clarity, and same with the VIX. So the VIX is just a real steady decline all day long, triggered by this strategy here, buy DR breakout. The event to the downside was over. We had the confirmation. The market wanted to go higher when it got above the CR plus, and it played out in volatility as well. For more information, please contact us at info@jsservices.com. Thank you.